Business credit isn't income, right? Cool, I'm glad we're on the same page. But imagine building your dream business using other people's money while creating a 6 to 7 figure income and not drowning in debt. Let's talk about how. So in this video, I'm going to show you how to get the cheapest money for your business. You will also learn how to use other people's money to minimize your risk and discover the secret of using a credit partner. Trust me, you don't want to miss that. And by the end of this video, you will know exactly how to fund your business without breaking the bank and stressing yourself out. Hey guys, welcome to the channel. If you're new here, my name is London. I'm a small business owner just like you. But a few years ago, I learned how to tap into over $250,000 of the bank's money with a brand new LLC. No fancy credentials, just smart strategies. Look, I'm not a financial advisor, but I've been where you are, and now I'm here to walk you through exactly what I did so you can do it too. Whether you're starting, growing, or scaling your business, this is the place to be. So let's get into it. Let's start with the basics. Not all money is created equal. Some credit sources are cheap, designed to help you grow and succeed, while others are costly and even predatory, waiting to trap you in an endless cycle of debt. Cheap money is what we're aiming for. It's typically found in tools like 0% APR business credit cards, low interest business lines of credit, or loans from reputable banks and credit unions. These options give you breathing room. With minimal cost to borrow the capital you need to grow. For example, U.S. banks offer a 0% APR for 18 months. Just think about that. 18 months of using the bank's money without paying a single dime in interest. Imagine the moves you can make in your business during that time. You can expand your reach, you can hire the right help, or you can upgrade your equipment, all while keeping money in your pocket. If you're not sure how to take advantage of this, don't worry. I'm about to break everything down for you. So let's get into it. Let's get into how you can qualify for cheap money like the U.S. Bank Business Platinum Unsecured Credit Card. Here are some key data points. Number one, set up a separate entity. Make sure you have an LLC or S Corp in place. Next, you'll need to co-sign for your business, aka a personal guarantee. Next, you want to maintain a 680 plus FICO score with a solid personal credit profile. U.S. Bank will do a hard pull on your TransUnion credit report. No collections. Ensure your credit report is clean of any collection, especially within the last 2 years. You must build a relationship with U.S. Bank. Have a business checking account. Here's the best part. No proof of business income is required. It's called stated income. You also get to project your income. Once you meet these requirements, walk inside U.S. Bank branch and apply for the unsecured business credit card. Your limit will depend on the information you provide on that business credit application and also on your personal credit and your business credit profile. Now it's time to talk about what do you do after you get approved. Here's the truth. Using other people's money, OPM, isn't about being reckless. It's about being strategic. You don't have to dip into your savings or your personal fund to grow your business. No, you work too hard for that money. You put in blood, sweat, and tears. Instead, use business credit to fund your inventory, for your marketing campaigns, or for your operational costs while keeping your risk low. Imagine this. You borrow $10,000 at 0% interest. That means you're using the bank's money for free for a certain period of time, of course. Now, instead of just spending it, let's say you use that $10,000 to run a strategic marketing campaigns with ads targeting the right audience to drive sales and grow your brand visibility. If this is done correctly, those ads can easily bring you $20,000 in revenue. You've not only made back the $10,000 you borrowed, but you also added another $10,000 as profit. All of this without paying a single dime in interest. This is how you play the game smart, right? You keep your risks low because you're not draining your savings or you're taking high interest debt. But you're also getting high reward because you're using borrowed money to create more money, making it work for you. Here's the best part. As long as you stay within that 0% interest period and repay the loan or credit balance on time, obviously, you're essentially leverage free money to grow your business. That's the power of thinking strategically and making your money work harder, not you. Are you tracking? But what if you're in a situation where your credit profile or limits aren't quite where they need to be at? Can you still pull this off? Don't worry, there's still a way to move forward. Let me introduce you to an overlooked strategy called credit partnering. But before we get into that, let's make this a win-win situation. Hit that like button and subscribe if you haven't already. Not only does it support me in creating more content like this, but it's also ensure you'll never miss out on any type of credit tips that I can help you level up your credit game. When it comes to credit partnering, let's just say you're aiming for $50,000 in funding, but you keep getting denied. Meanwhile, your spouse has an excellent credit score and a $20,000 limit. By adding them as a partner in your business and leveraging their credit profile, you can combine strengths and dramatically improve your chances. In fact, in this case, you ended up getting approved for the full $50,000. Here's how you form a partnership. First, decide how that person, whether it's your brother, your spouse, your cousin, a family member, or a friend, will be involved in the business. Will they be an equal partner, sharing responsibilities and ownership, or will they act as a silent partner just for credit purposes? You need to be very clear about their role and make sure it's properly defined in your business. Next, you need to update your LLC business entity paperwork. It's not required on all states, but in some it's required. This means adding their name as a co-owner or partner and amending your operating agreement or similar documents to reflect the new partnership structure. And finally, don't forget to file these changes with your state. You need to submit any requirement updates to the Secretary of State office to make everything official. Once the person is officially part of your business, you can leverage their strong personal credit profile to apply for higher limit funding. Here's a few things to keep in mind. Only partner with someone you trust, completely trust, as their credit and financial responsibility will directly impact your business. You want to keep everything professional, even if the family member have a clear agreement and in place outlining their role, potential tasks, and any other compensation. Remember, any debt or funding tied to the business may appear on their personal credit report. So ensure they're comfortable with that. Think about starting your LLC. Watch this video next to learn the steps you must take before to boost your chances of getting immediate funding.